Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Ukraine fires U.S.-made missiles into Russia, escalating the 1,000-day conflict into a dangerous new phase. United States envoy Amos Hochstein says a ceasefire in Lebanon is within our grasp as the U.S. hopes there'll be a decision on a deal in the coming days. And Turkey's central bank is expected to hold rates for one final time in 2024. Tomorrow, we speak to Professor of Economics at Koç University, Selva Demiralp, on what this means for the Turkish economy. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Jimana Versace in Dubai. Geopolitics squarely back in focus. Yesterday, the markets reacting to news that Ukraine had actually sent those long-range missiles into Russia. That prompted a response out of Russia saying that they could use or tap into their nuclear arsenal in retaliation. So again, that sent some tremors through the markets. What we did see was a big rally in U.S. rates. 10-year yields rallied about 8 basis points at some point throughout the day yesterday, sitting at around 4.4 now. 10-year bonds in Germany rallied 11 basis points on the news, telling you that some of that geopolitical risk premium is being priced in, especially to those European markets, which ended down about 0.8% in trading yesterday. But as for U.S. markets, as ever, this always appears to be the case, but brushing off some of those geopolitical concerns. Once again, we saw S&P end the day in the green today. Futures are leaning towards positive as well. We had strong results come through from Walmart. Always an interesting one to watch because it is a retail stock, also a good litmus test for consumer spending. Coming in stronger than expectations. Magnificent Seven also posting gains of more than 1.5% yesterday. All focus, and we've been speaking about this for the last couple of days, is going to be on NVIDIA earnings coming out later this evening. So something to watch out for there. And of course, it tends to be a massive driver of direction for markets, especially the Magnificent Seven, as we've been talking about. Bitcoin, once again in focus too, 92,000, now close to all-time highs. Again, one of those Trump trades that just continues to do well in light of a more positive administration coming in for the crypto community. Let's switch over, though, because I do want to mention NVIDIA, and we're going to get into more detail as to what to look out for in these earnings, particularly any color on what's happening with those Blackwell chips. Remember, at the last earnings call, the CEO had spoken about quote-unquote insane demand for their Blackwell chips. So let's see how the commentary sort of evolves heading into this earnings call as well. But this one is quite interesting because it tells you that NVIDIA stock price is very close to record highs, but from a price to earnings perspective, it's actually half of the peak that we reached back in 2021. So perhaps indicates that there is potentially more upside for the stock from here. So something to think about. All right, let's also check in on how markets in Asia are faring. Avril is in a Singapore studio. Avril, there are two drivers today. One is talk about NVIDIA, the big earnings number that is coming up. On the flip side, concerns about geopolitics. So how are Asian markets taking it?
Well, Asian markets are flat. Look at the benchmarks. They are cautious. To your point about the drivers, it's really watching out for NVIDIA earnings. That could be a catalyst for markets in the region, particularly the tech-rich names. As you look at the likes of Taiwan, for example, and how about a week or so ago, we got these reports that the U.S. would block TSMC's AI chip shipments to China. So clearly, geopolitics is not helping. The hope is that NVIDIA provides a sort of boost or a lifeline for markets in the region. And this is also coming on the day where we're seeing relative underperformance in the Nikkei, and this has got to do with the insurers that are dragged today. Tokyo Marine, the big name, of course, in Japanese insurance, that missed on its revenue guidance. And also, to your point about geopolitics, how the Japanese yen initially saw safe haven demand. It's given up much of that now as the dollar firms. Jumana.
Avril, thank you so much. Well, let's go back to the geopolitics. Russia's war in Ukraine has entered a new phase after Kyiv launched its first attack on Russian soil using U.S. long-range missiles. At the same time, President Vladimir Putin has broadened guidelines on Russia's potential use of nuclear weapons. For more, Bloomberg Asia senior editor Bill Ferries joins us now. Bill, well, we saw quite a sharp reaction in markets yesterday and concern that we are entering into a new phase. Is this actually a new phase? And if it is the case, how dangerous is this moment in the war?
Well, it does seem to be a new phase. I mean, we're seeing a couple things happening on really both sides of the conflict now. The first one was Vladimir Putin announcing that Russia was basically easing some of their previous strategy or guidance on potential use of nuclear weapons, essentially saying that they can respond with nuclear weapons to a non-nuclear armed opponent who's working with a nuclear ally in a massive conventional attack on their territory. So there's a lot of questions about how you define all those different things. It is something that he announced he was going to do a couple months ago, but the publication of that new shift in strategy came right after the U.S. Gave Ukraine permission to start using these longer-range missiles to attack deeper inside Russian territory. It's a missile system Ukraine has had, but they've been restricted by the U.S. from where they could deploy them. So those reins are off. Ukraine has put that to use. And in addition, we've just confirmed in the last few minutes that the U.S. is going to be providing anti-personnel mines for use in Ukraine, with the idea being that they can try to slow any Russian advance. I think basically what we're seeing is a lot of jockeying going on ahead of January 20th, when Donald Trump takes office. There's a fear on the Ukraine side that Ukraine will lose a lot of U.S. support at that point, and Russia will face a lot of pressure to settle down to some kind of a truce agreement at that point.
Yeah, you sort of took a look ahead to what the next question I was going to ask you, which is how much of the decisions coming out of the Biden administration are in anticipation of a change of presidency. But, you know, more broadly, people were talking about the G20 communique and the fact that it's been a couple of years now that the language surrounding the war in Ukraine has been watered down. There hasn't been really strong criticism of Russia, but instead a lot of language about looking for a peace plan that is actually just for Ukraine. What role do the G20 have in getting to or somehow forcing both sides to come to the negotiating table?
Well, I think overall the G20's leverage is probably somewhat weak, but I think what that meeting showed is a lot of the widening cracks among the different members, among the world's biggest economies. They represent 85% of the global GDP. You see a lot of those cracks widening in terms of how long they're willing to sustain this effort. Whether they really are as united as perhaps we saw, let's say, a couple years ago. President Lula of Brazil actually just hit the send button basically on the G20 communique, while world leaders were still debating how much they should focus on Ukraine and Russia in that traditional statement. So I think there's a lot of impatience. I think a lot of developing country leaders of the global South, want to see a focus on issues like climate change, on issues like poverty and economic growth, and they want to get away from some of this focus on the conflict. Even within NATO, you're starting to see some divergences over how to go forward with this. And Turkish President Erdogan has put forward now his own plans for what would essentially be a truce that would leave Russian forces in control of a large part of Ukraine.
Yeah, very interesting to hear that from a NATO member. Bloomberg Asia senior editor Bill Ferries, thank you so much. Well, let's continue with the geopolitics to the Middle East now, and the United States envoy Amos Hochstein, who says an agreement to end the Israel-Hezbollah war is within our grasp after talks in Lebanon. If successful, the proposal would entail a withdrawal of both Hezbollah fighters and Israeli ground forces from a UN buffer zone in southern Lebanon.
This is a moment of decision-making. I'm here in Beirut to facilitate that decision, but it's ultimately the decision of the parties to reach a conclusion to this conflict. It is now within our grasp. So as the window is now, I hope the coming days yield a resolute decision.
That was Amos Hochstein. For more, let's bring in Bloomberg's Dana Khresh. Dana, so Nabih Berri, who's the Speaker of the House in Lebanon, after this meeting took place, actually said that there's still, quote, some technical details to finalize. And we know that after this, Amos Hochstein is going to make his way to Israel. Do we have any idea what those technical details are?
Right. So we know what Lebanon is trying to negotiate here. 2 points. One is the idea that Israel will retain the right or freedom of action in Lebanese airspace and on the ground in case Hezbollah violates or there is any resurgence of Hezbollah fighters along the border. And the second one is the mechanism to supervise the violations. They're saying that as it is, the UN resolution does supervise this, and they don't want to increase any numbers or introduce any other mechanisms that they think might violate Lebanese sovereignty, and they think that there shouldn't be any more countries contributing to that. So they want to keep it as it is. They've been saying, we just want to implement UN Security Council Resolution 1701, which of course establishes that buffer zone, which is about 30, maybe 20 kilometers from Israel's border to the Litani River, and they want this to be without the presence of any armed groups except for the Lebanese army, except for the UN peacekeepers.
How should we read the fact that Hochstein is making his way to Israel? Because that in itself potentially offers a glimpse of a hope, and that there is enough on the table for him to go to the Israeli Prime Minister and say, look, this is what the Lebanese side is offering.
Exactly. So Lebanese officials, we heard them, and from local media, what they're saying is now this is in Netanyahu's ball. So they expect Hochstein to take what the Lebanese had agreed to and take it to Israel. The big fear from the Lebanese side is that maybe Israel would not agree to that and kind of throw these negotiations into the area again. We remember what happened before that UN General Assembly, that famous Netanyahu speech a month ago, where the US and France had drafted a ceasefire agreement, and then that didn't really go ahead because Israel rejected it, and then they went on to kill the Hezbollah chief Hassan Nasrallah because Israel then wasn't ready to end the war. It still had certain goals to achieve in Lebanon. Now, if he does go to Israel, then this is a very positive signal. We could be heading into that. We know that, there's a huge humanitarian crisis in Lebanon, and that's what these officials keep saying, that we need to end the war. We need to look internally. What do we do with the 1.2 million people who've been displaced? So if he does go, this is a very positive signal. But again, in the Middle East, you got to be very cautious about the positivity.
That's for sure. And as ever, keeping a close eye on the January inauguration of President Trump. So we'll see how things change. It certainly appears as though the Biden administration are pushing to get this done in the near future. Bloomberg's Dana Khresh, thank you very much. Now, sticking also with some very important geopolitical news as well in the region, the UN nuclear watchdog says Iran has agreed to stop enriching uranium to close to the levels needed for weapons. IAEA monitors say Iran's engineers are taking the first steps needed to cap output of 60% enriched fuel. It comes after talks in Tehran this month between the agency's Director General and Iran's president. And still ahead, Donald Trump's search for a Treasury Secretary intensifies as he's set to hold interviews with prospective candidates. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President-elect Donald Trump's search for a Treasury Secretary is intensifying. Sources say he scheduled Wednesday interviews with former Fed Governor Kevin Warsh and Apollo Global Management CEO Mark Rowan. For more on his picks, let's bring in Bloomberg's Katya Dimitrieva. Katya, good to have you with us. So the hunt for Treasury Secretary continues, and we've been following the ins and outs very closely over the last couple of days. What is the latest in terms of who might be the next Treasury Secretary, and also what direction is it signaling for Trump's policy moving ahead?
You're right. It's been kind of a rapid fire over the past few days of cabinet announcements. And the Treasury Secretary role is proving a bit more difficult, and some would say chaotic. We've had a laundry list of names. I can read you off a few of them. It's former Federal Reserve Governor Kevin Warsh. Of course, he worked very closely with Wall Street and was kind of a liaison between the Fed and Wall Street during the 2008 financial crisis. Apollo CEO Mark Rowan, Key Square Group founder Scott Bessent, and Senator Bill Hagerty. So all of these folks have either financial sector chops or perhaps government adjacent roles, but not necessarily both. And from the list of names, you can see that they sort of follow the Trump model. well. You know, these are people who would have expertise in the financial sector, and he's also going to want someone who's loyal to him. This is a really important post, and perhaps that's why it's taking a bit of kind of back and forth. There's been some jockeying publicly for certain people. For example, Elon Musk jumped in online to flag his favored candidate. I mean, this is the face of economic policy for the U.S., for the rest of the world. And so this is taking just kind of a bit more time to sort out.
Yeah, and Trump has also made some other key nominations in the past 24 hours, including Commerce Secretary. That one's an interesting as one. He has nominated Howard Lutnick, who is the CEO of Cantor Fitzgerald, again for Commerce Secretary. What can we expect from Lutnick? And is he also expected to embrace this protectionism and talk of tariffs that Donald Trump himself has espoused?
Yes, and really important. Lutnick, actually, we do know some of his former views. So he was previously a contender for the Treasury Secretary role. And under Trump, he's going to have an expanded role in commerce. So Trump has handed him sort of the lead role on tariffs and on trade policy. And what we know from his prior statements is that he is a China hawk. Surprise, surprise. We have someone that Trump picked who has flagged before that, for example, China on certain issues is killing the U.S. economically. He's criticized China for the fentanyl crisis in the U.S. And he's also not a very big fan of green technology. He's said that EVs are kind of a West Coast elite thing. So we can expect, those policies to fall in line with those prior statements. But companies will be looking very closely to see what kind of comments he'll be making over the next little while on those subjects.
Bloomberg's Katya Dimitrieva, thank you so much. Well, coming up, Bloomberg Economics expects Turkey's central bank to hold rates one final time when it makes its rate call tomorrow. More insight from Koç University next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Bloomberg Economics expects the Turkish central bank will hold rates for one final time in 2024 tomorrow. Joining us now from Istanbul is Selva Demiralp, the professor of economics at Koç University. Good to have you with us. So all eyes on the central bank decision tomorrow. And the reason it's become quite sensitive is because President Erdogan himself indicated that maybe it could be the time to start cutting interest rates. My question is, from a pure economic perspective, when you have inflation rates of more than 45%, is it feasible and is it a wise decision to do so?
Well, it is feasible if you are prioritizing growth and if you are aiming for a softer and longer landing. But it's not preferred if you are actually aiming to reach 21% inflation by the end of 2025. Central bank has just recently, last week, revised its year-end forecast for 2024 by 6 percentage points. And so it was 38% before, and now it's 44% for the year-end 2024. And it also revised up its forecast for the end of 2025. So normally when a central bank revises up its inflation forecast, you might expect the central bank to be more hawkish. However, you can also say, well, if the central bank is kind of saying that I am going to go easy on the economy and I'm going to be more relaxed right now, and if on top of it, as you said, President Erdogan, who has been silent for a while on issues like monetary policy and inflation, comments on it, in the Turkish environment, I think it is signaling that not tomorrow perhaps, but in the upcoming meetings, the central bank is going to start easing, perhaps more than several times in a row.
Do you think that is why we saw a bit of a shakeout in Turkish assets over the last couple of days? Just looking at local bond markets, the bond yield, 10-year bond yields rose 23 basis points on Monday. The Turkish lira, as we know, continues to weaken as well. Do you think investors are getting nervous about what could happen in the coming months?
I think investors are being rational in the sense that I actually have done some research on this. We looked at the central bank's reaction function and how the central bank reacts when there are political comments from the leaders. We did this for a bunch of countries, like United States, how the Fed responds to Trump's comments, or in the Turkish environment, how Turkish central bank responds to Erdogan's comments. And you see that when the institutional environment is a little bit weaker and central bank independence is not well established, such as in Turkey, the central bank's chances of keeping a hawkish stance significantly goes down. And in that environment, markets are also rational. They kind of anticipate how the central bank will respond to such political comments, and markets price a potential easing by the central bank. And when the president, for example, says the central bank should cut interest rates, you see market rates going up in the opposite direction. And that's exactly what we are observing right now. Turkish lira depreciating and market interest rates are going up.
Yeah, I read somewhere that the Turkish society is more susceptible to an uptick in unemployment than it is to high levels of inflation. Is that correct based on the research that you've conducted?
Yes, I would say so. I mean, when you look at Turkish economic history, you see that the sensitivity to growth has always been higher than the sensitivity to inflation. And Turkey had chronic inflation in the past. Yes, after 2001, when we had structural reforms and central banking reform, we were able to lower inflation to single digits in a matter of a couple of years. However, especially in the period after 2018, central bank independence has weakened, and that made it more difficult for central bank to resist the time inconsistency problem, if you will, when the government wants to promote policies to push growth higher. The central bank kind of gives in and lets the interest rate environment to be more friendly for the investors and the firms. And this has been a political choice. And I think this is what we are going to see one more time. Although the inflation rate is 44% forecasted for year-end, the central bank will probably ease its policy rate. And next year's year-end inflation target won't be 21%. It will be closer to 30% most likely. So we will just go slowly. We are going in the right direction, however. I mean, it's not like the policies that we had adopted, the kind of adventurous, unorthodox policies after September 2021. We are implementing an orthodox policy, perhaps not as hawkish as an ideal academic would prefer, but it's just going to go there in a more gradual manner.
Yeah, that makes sense. And also your point about year-end expectations for 2025 is very valid. Selva Demiralp, the professor of economics at Koç University, thank you so much. Before we head to the break, quick look at equity futures. This is what the market is looking like, all in the green. So really brushing off some of those geopolitical concerns. When we come back, we're going to be speaking to investing veteran Hazem Ben-Gacem. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Ukraine fires U.S.-made missiles into Russia, escalating the 1,000-day conflict into a dangerous new phase. The opposition leader in Somalia's breakaway region of Somaliland has been declared the winner of last week's presidential election, a victory that is set to give a boost for the region's push for international recognition. And former Hong Kong media mogul Jimmy Lai has denied advocating for the city's independence from China as he took the stand for the first time in his trial on national security charges. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Well, geopolitics front and center again. We have been talking about the Ukraine firing some of those long-range missiles into Russia, prompting response out of Russia saying that they have their own nuclear weapons at disposal to retaliate as well. That prompted a big reaction in European assets yesterday. We saw some of the majors end the day down 1% in European trading. 10-year bond yields down 11 basis points. 10-year U.S. Treasury yields down about 8 basis points throughout the course of the day as investors got a little bit concerned about what this could mean as we enter into this next new dangerous phase of escalation in Ukraine. As for Wall Street, though, continuing to brush off concerns about geopolitics, the stock markets continue to move higher. Yesterday was a positive day for both the S&P and NASDAQ. Magnificent 7, always in focus, up more than 1.5% in trading yesterday. All eyes today on NVIDIA trading. You can see the futures both up about 15 basis points. Bitcoin also making a new record high. 92,000 is where we're at right now. But NVIDIA earnings to watch out for later today. One thing that I want to flag to you is even though the stock is trading close to an all-time record high, in terms of a valuation perspective, we're looking at a PE that is roughly half of where it was back in 2021. So if you look at it from this perspective, the stock isn't as rich as it was a couple of years ago, just from a PE perspective, not stock price, obviously. So some context here. Context changes everything, as we like to say at Bloomberg. All right, moving on. Let's check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us a run-through of how some of these Asian markets are faring today.
Yeah, Asia markets treading cautiously ahead of NVIDIA earnings, but I also wanted to highlight what we're seeing in the dollar-yen pair because we did see a bit of safe haven demand for the Japanese currency after developments between Russia and Ukraine. It's hovering near the 155 mark now, and it speaks to, I think, how the yen has lost a bit of its credentials as a haven currency. And of course, dollar-yen has been climbing given the lack of consensus about the BOJ's December meeting, whether we're going to see a rate hike. There's also some uncertainty about the official line on its budget, given what the opposition party has been demanding. So against this backdrop, there seems to be a sense of dollar-yen's continued climb. And that's drawn speculation of when we can see intervention from Japanese authorities. This is the point that MLive's Mark Cranfield is making, that it might actually be delayed. Because if you look at the yen on a trade-weighted basis, where it is now, still quite a whiles away from the July low. So suggesting that any intervention might be, a distant kind of prospect, and that dollar-yen can continue potentially its climb to 160 something. Jumana.
Yeah. Avril, we had a Nomura analyst on the show yesterday, and he seemed to think that intervention territory was around 158 to 160. So just to back up what Mark Cranfield was saying there. Avril Hong, thank you so much. A private equity investor and former Investcorp executive Hazem Ben-Gacem has launched a new fund in Abu Dhabi and Bahrain focused on investments in the global south. Let's get more from the man himself and bring in the founder and chief executive at BlueFive Capital, joining us from New York. So first of all, thank you for staying up late, and also congratulations on the new fund. Just talk to us a little bit about where you're looking to invest. What opportunities are you seeing right now?
Good. Well, first, Jumana, thank you so much for having me on your show, and thank you for Bloomberg TV for having me. So, Jumana, what we're hoping to do is to raise a unique and innovative investment platform originating out of the Middle East, focusing on consolidation plays in the financial services industry. And let me be a bit more specific. That is consolidation across the insurance sector, more specifically annuity products, private wealth channels, and public markets. And within public markets, specifically digital assets, marketplaces, and particularly what's happening in the U.S. market and the U.S. Presidential election, is highly likely that digital assets will be one of the fastest and most interesting area for growth in the next decades. Our playground is very much the global south. These are secular economies that are benefiting from very solid secular trends over the next decades. Economies in Southeast Asia, in GCC, and selectively in Latin America. That is what BlueFive aims to be focused on. And I hope we can offer our investors, savers, a very interesting and unique product that is very much catered for the 21st century and taking advantage of a lot of these macro trends.
I'm curious to hear about your allocation or focus on the financial sector, specifically insurance. You mentioned digital assets, I understand. But what are you looking to unlock in terms of opportunity and growth potential specifically in those asset classes? Because they're quite traditional, barring the digital side, of course.
You're absolutely right, Jumana. These are sectors and industries that have been around for a very long time. The U.S., the West in general, and the U.S. more specifically, have really led a lot of the innovation a lot of the 21st century types of products and solutions around annuity products, around a lot of the solutions that savers and pensioners are looking for. These products and solutions have not yet been as developed in the global south. And in large part, through our buy and build model, we're acquiring existing players and then putting a lot of this innovation in place to offer savers solutions and products that are akin to what you see in many other parts of the world. One other thing I should add, Jumana, which is as important, is digital enablement of a lot of these solutions. This is the way of the future. This is a big part and a big core of the DNA of BlueFive. It is very much about digitally enabling access to private wealth solutions, access to insurance solutions, but also access to public markets. That in the global south today tends to be quite fragmented and not as straightforward to access.
Hazem, it feels as though there is a ton of fundraising going on at the moment. So number one, there's competition on that front. And number two, the investment opportunities. Is all of that money, I'm talking more broadly, not specific to your fund, actually going to end up in lucrative opportunities?
Yeah. So, Jumana, in every single sector, there's competition. It doesn't matter which sector you're in. Financial products, financial investments, private equity, selling chairs, cups, cars, there's always competition. That is not the driver for success. The driver for success is being innovative, creative, and unique. And that is what we hope we will do. We thrive in competition, and North America is the best example. They are the best innovators in financial products and many other products because of competition, and that is terrific. So if anything, I look forward to our peers challenging us to do more and do better. Now, in terms of our access to capital, and this is very important, we are in the process of BlueFive at putting in place, hopefully, one of the most blue chip and respected shareholder circle, a group of shareholders from many parts of the world, particularly in the global south, in the Middle East, in Southeast Asia, and in Latin America, that will be our partners of management into building BlueFive into hopefully a very unique platform.
How big are you expecting the fund to be? Can you give us any color on how much funds, how much you have raised already, or what you're planning to achieve in terms of scale?
So, Jumana, if we are going to target a very large market, very large geographies, you'd expect that our ambitions are going to be substantial. It's not going to be small. But let me talk on something which is more importantly. It is the construct of this fund. Historically, funds have been in the form of what's your dollar amount? Is it $1 billion, $2 billion, and then LP commitments. We want to do something different. Commitments will be either in the form of cash, pay in kind in terms of assets, but also digital assets. And I hope that BlueFive will be one of the very first platforms where the fund will be a combination of liquid commitments, but also digital assets in some shape or form that could be used into our consolidation play. That is innovative. It is new. We're still working through it. And I hope in your show in January, we can talk in more detail of how that will actually manifest itself.
Yeah, that's interesting, given the backdrop of Bitcoin making new highs and an American administration coming in that's going to be perhaps a little bit more friendly to the digital assets construct. Final question for you. When you talk about the broader private equity industry, we talk about the fact that that market has stalled. There's more than $3 trillion sitting, waiting for an exit, waiting to IPO. There hasn't been a lot in the way of exits and acquisitions as of late. How do you see that market getting going again?
Yeah. So first, Jumana, the private equity industry have survived the test of time. This is very important. This is an industry which is now going into its fifth decade. On a relative basis and on a risk-adjusted basis, private equity returns consistently over the last 5 decades have exceeded most other asset classes in the private markets. This is very, very important. Capital is great. The beauty of private equity is it attracts a very innovative mindset. And that is the challenge each one of us in the industry have, to be innovative, differentiated, and create value creation to our investors, which is far beyond buy, leverage, multiple expansion, and exit.
That's a good place to leave it. I appreciate your time, and we'd love to hear updates on how the fund is doing. Founder and Chief Executive at BlueFive Capital, Hazem Ben-Gacem, joining me from New York. Thank you. The opposition leader in Somalia's breakaway region of Somaliland has been declared the winner of last week's presidential election. Abdirahman Mohamed Abdullahi received more than 50% of the votes, defeating President Musi Bihi Abdi, who sought a second term after 7 years in office. The victory is set to give a boost for the region's push for international recognition. So let's bring in Bloomberg's Ondiro Ganga, who joins me from Kigali in Rwanda. Big story, Ondiro. So what propelled the opposition party to such a huge victory?
Jumana, we saw this incoming government lead their campaign on the basis of democratic reforms and social cohesion. And for this, they won this election convincingly by 64% of the total votes. They also promised to grow the economy and create jobs, particularly for the youth, which is a problem that's not just unique to Somaliland, but across the continent. This is a country that does not have international recognition, so they have very limited access to international funding. And also, there's very little external investment going in. So this limits the pace at which the economy can grow and the rate at which they can grow their jobs. The outgoing government, which is led by President Musa Bihi, has been in power for 7 years. The election was delayed for 2 years because of technical and financial issues, and he only garnered a dismal 34%, which goes to show the kind of dissatisfaction that people had in his administration. The most notable thing that happened during his administration was the memorandum of understanding that Somaliland struck with Ethiopia, but this is threatening to cause regional tension, and it strikes close home because Somaliland declared independence from Somalia in 1991 after a civil war, and they've managed to become a stable country. They have their own currency, they do elections, and they're considered to have sort of warded off that security threat that Somalia is currently struggling with.
Yeah, I also saw that the Somalian Prime Minister actually congratulated the new president of Somaliland, so perhaps a move in the right direction. But what does the shift in leadership mean for Somaliland's hopes and quest for global recognition?
It's a double-edged sword because, one, Somaliland was hoping to gain global recognition through Ethiopia. They had agreed on a memorandum where Ethiopia gets access to the sea, they build a port and a military base, and in exchange, Somaliland gets an unspecified stake in Ethiopian airline. But most importantly, they gain international recognition, something that angered Somalia, and they said they'll retaliate if they're provoked. And we see that the incoming government has been very hesitant to throw their support behind this MOU, so which puts that route of global recognition in limbo, but they're hoping that the incoming U.S. administration will be a little bit more favorable to them. They've had an election, they're fairly peaceful, and democracy is seen to be the norm in Somaliland, and these are things that they're hoping will go a long way in making a good case for them when they want to gain that international recognition, particularly from the U.S. The region has also received this news well. They've gotten congratulations from Djibouti and from Somalia as well.
As we were just talking about Bloomberg. So Ondiro Ganga joining me from Kigali in Rwanda. Thank you so much, Ondiro. Always a pleasure. Now, coming up, former Hong Kong publisher Jimmy Lai denies advocating for the city's independence from China as he takes the stand for the first time in a security trial attracting global interest. We are live outside the courthouse next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Former Hong Kong media mogul Jimmy Lai has denied advocating for the city's independence from China as he took the stand to defend himself against national security charges. China correspondent Min Lo joins us from outside the magistrate's court in Hong Kong. A second day in a row here. Just walk us through what is happening today at these hearings.
Yeah, Jimmy Lai is testifying in court for the first time in nearly 4 years, ever since he was put into solitary confinement in December of 2020. He was arrested in August of 2020, and he's facing 2 counts of collusion with foreign forces and 1 count of publishing seditious material. And this is related to his role as the founder of Apple Daily, the pro-democracy newspaper that was forced to shut down in 2021. And so Lai appeared in court today. He was led in by police, looking visibly thinner, but appeared to be in good spirits. He was smiling as he waved to members of the audience. He began giving his testimony early this morning, and a couple of things stood out to me. He appeared to be rebuffing allegations of him being a political radical. He said that he never advocated for Hong Kong's independence. And he said that idea was so preposterous that he had never allowed his staff of his newspaper to mention that. He also denied donating money to influence U.S. policy on Hong Kong, saying that he only made donations to U.S. think tanks and religious organizations. And his ties with foreign dignitaries also came under scrutiny, including his encounters with, for example, the former Taiwanese President Tsai Ing-wen, as well as the former U.S. Vice President Mike Pence. He said that yes, while he did ask Mike Pence to show his support for Hong Kong, he said it is really beyond him to be able to tell the former Vice President what to do. So appearing to downplay his interactions with these foreign dignitaries as well. He also mentioned that he started Apple Daily because it reflected the core values of Hong Kong, which he said include freedom, the freedom of assembly, freedom of religion, the pursuit of democracy. And we know that the national security law is a very broadly worded legislation that essentially criminalizes any sort of subversion, collusion with foreign forces, and essentially banning any sort of political protest in the city.
Well, we were speaking to you yesterday, Min, about the sentencing of, I think it was 45 individuals. Again, national security trial taking place today, a hearing from the media mogul himself. What has the reaction been like so far from the international community? Are we getting any responses?
Yes, as you said, it came hot on the heels of that sentencing of the 45 pro-democracy activists that had already drawn condemnation from the US and Australia. And you have the British Prime Minister on Monday raising the issue of the deteriorating health of Jimmy Lai in prison, with President Xi Jinping at the sidelines of the G20 summit in Brazil. But we know Hong Kong authorities have denied that Jimmy Lai is being mistreated in prison, saying that Jimmy Lai himself had chosen to be in an isolated cell. And Beijing has also responded to these Western criticisms, saying that they are trampling on the spirit of rule of law. And this trial is also under scrutiny because not only is Jimmy Lai not granted a jury trial, and again, he is being tried by 3 judges handpicked by the chief executive, John Lee, he was also denied hiring a lawyer of his choice. The top British lawyer, Timothy Owen, was barred from representing him after Beijing issued the first interpretation of the national security law, saying that the power to bar these foreign lawyers in such cases rests with Hong Kong's chief executive and a powerful national security team. And so certainly this is drawing a lot of close scrutiny from the international media and international community.
Min, thank you so much. That was Bloomberg's China correspondent Min Lo from outside the West Kowloon Magistrates Court in Hong Kong. Now, coming up, anticipation builds as investors await the release of NVIDIA's quarterly earnings and what the numbers will say about the state of the AI boom. A preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Korea Zinc CEO says he's working to regain shareholders' trust after being forced last week to scrap a nearly $2 billion share sale. That marked a blow to the company's efforts to fend off a hostile takeover from its biggest shareholders. In an exclusive interview with Bloomberg, we asked Yoon-Vi Choi about what led to the decision.
That's a tough question. One real mistake was the rights offering. Yeah, we misread the market. It was perhaps a smart move, but definitely not the wisest move. It was a tactical error on our part, not reading the market, not expecting the reaction of the market. People who complained, rightly so, were the people who were our current shareholders whose share prices dropped upon our announcement, and perhaps the beneficiaries of the rights offering were yet existent. I mean, they were to be our future shareholders. So we definitely miscalculated that. We definitely put the cart before the horse, as they say.
Are there any scenarios that are forthcoming that would, in your mind, force you to step down?
If we feel that there is somebody who is better fit to run this company, I will be happy to step down. It will be my duty to step down. It is not, especially for the last 2 months, it has not been the most enjoyable experience running this company. But it is a duty. It is a duty that I enjoy. I do not serve as the CEO of this company because I own a small percent of this company. I believe I'm a CEO of this company because I'm the best person to run it. And I have immersed myself in this job less than 20 years. For some people, that might be long, that might be short. But it was a total immersion. And that is true not only for myself, but all the core members of this business. And one really, truly needs to be in a state of total immersion in order to run the company like Korea Zinc as we do.
Korea Zinc CEO Yeonvi Choi speaking exclusively with our chief North Asia correspondent Stephen Engel in Seoul. This is what equity futures are doing as we head into an important day today. The European market's still digesting the geopolitical impact of Ukraine launching those long-range missiles into Russia, potential escalation there. But your stocks futures are actually leaning towards the green. And then the big event that's happening in the U.S. market today are those NVIDIA earnings. So in terms of the aggregate number, the street is estimating a revenue estimate of $33.2 billion, but some of the more bullish analysts out there, the likes of Dan Ives, expecting $2 billion more than that, $35 billion, a $2 billion revenue beat, and a raise in the Q4 guidance, namely because this might be the quarter that you start to see an impact from the sale of those high-tech Blackwell chips. And remember, the last quarter, the CEO, Jason Huang, talked about insane demand, that is a quote, for those Blackwell chips. So will that emerge in the bottom line when you think about the trajectory ahead for NVIDIA in the coming quarters? How that demand is going to look like is going to be scrutinized by investors. But here you can see that the stock is close to an all-time high, up 800% in the last couple of years. That was it for the first hour of Horizons Middle East. I'm Jumana Versace in Dubai. Stay with us for the second hour with Christine Burke and Jennifer Zabazaja. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Ukraine fires U.S.-made missiles into Russia, escalating the 1,000-day conflict into a dangerous new phase. United States envoy Amos Hochstein says a ceasefire in Lebanon is within our grasp, signaling hope there'll be a deal in the coming days. Plus, President-elect Donald Trump's search for a Treasury Secretary continues. Sources say he's scheduled to interview former Fed Governor Kevin Warsh and Apollo Global Management's Mark Rowan. Well, good morning. It's just gone at 9 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jumana Versace.
Yeah, it's great to have you, Christine. And I'm Jennifer Zabasaja in Johannesburg, where it is just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Well, let's take a look at how markets are faring this morning, because we're proving to be pretty resilient in the face of those rising geopolitical tensions that we've seen coming through in the last 24 hours or so. Looking at the U.S. futures market in particular, you can see that we are heading toward potentially another day of gains across Wall Street. But really, it's going to be tech that comes into focus today, and that's why the NASDAQ is here. NVIDIA earnings are going to be in sharp focus, so you'll want to keep some attention there. I want to draw attention as well to the U.S. Treasury market. If you'll recall, yesterday we had a pretty significant rally for global bonds. That seems to be coming off a bit. We've got a bit of choppy trading in the last hour or so. So keep an eye on where we go from there. And when you look at Bitcoin as well, we are seeing a bit of weakness. But remember, we hit yet another record for the cryptocurrency yesterday. Again, on the back of all these expectations that Trump will come into the White House and potentially usher in a new wave of regulation that will be pretty much pro-crypto. Now, if we can go to talking about NVIDIA earnings more for just a second. It's really going to be tech that takes focus as we move into the U.S. session. And you can see here in this chart, so we see this chart is showing you the price to earnings ratio for NVIDIA. And what it's showing you is that when you look at the PE ratio, we've really seen it come down by about half since reaching that peak in the middle of 2023. But at the same time, you look at the trajectory of the stock, boom, up about 200% this year for the NVIDIA stock. So those are a couple of things to keep in mind as we head forward into the NVIDIA earnings today. Let's get over to how things are shaping up in Asia. Avril Hong is standing by in our Singapore studio. Avril, what are you watching this morning?
Yeah, Christine, it's so interesting ahead of NVIDIA earnings, how we're seeing that caution in the markets. Traders are treading cautiously as they look to perhaps get some catalyst out of the NVIDIA earnings. TSMC is the big drag on the region's benchmark today. But note here that in terms of trading volumes, it is about 40% lower than usual this time in the session. I wanted to highlight what we're seeing in Japan. Really interesting. Some of these companies, 7&I, Tokyo Gas, jumping by double digits earlier in the session. 7&I, after we got word that its founding family is looking to take it private by February. Of course, this is to fend off a takeover attempt by a Canadian firm, and this is the company that, of course, owns the 7-Eleven chain of convenience stores. Tokyo Gas also jumping double digits after activist investor Elliott said it owns a major stake and is looking to make big changes. So what's interesting about this is the dynamics that we're seeing in the Japanese stocks as traders perhaps are looking away from the export counters that tend to fare badly when the yen gains, looking at individual companies more importantly. So this is an interesting dynamic that's been emerging in Japan, guys.
All right, Avril, well, thanks so much for that. That was Avril Hong in our Singapore studio. Well, Russia's war in Ukraine has entered a new phase as Kyiv launches its first attack on Russian soil using U.S. long-range missiles. At the same time, President Vladimir Putin has broadened guidelines on Russia's potential use of nuclear weapons. For more on this, Bloomberg's Greg Sullivan joins us now here in our Dubai studio. So, Greg, it's great to see you on set today. A lot has transpired in the last 24 hours. How are you reading this expansion in the doctrine by the use of nuclear weapons for Russia in particular? I mean, is this an escalation in rhetoric, or is this more or less of the same?
Well, it was definitely a well-timed warning to the West. There's no question about that. I don't think we can read the timing as a coincidence, but what I would caution is that President Putin himself said most of what he was going to do back in September. Now, yesterday we saw the documents for the first time. They formalized those changes, but it was largely what Putin had already telegraphed would happen. Nonetheless, I think it is a warning to the West. Putin has long warned the West that any kind of use of U.S. weapons would be read as U.S. complicity or involvement in the conflict, and the Kremlin largely parroted that line throughout the day yesterday.
And Greg, this is Jennifer in Johannesburg. Listen, this was an escalation. Clearly, the markets were spooked. But I wonder how much is this an escalation into what we are actually seeing and what we've seen over the past few years? Is this potentially putting any further talks in jeopardy?
Well, yes, it was clearly an escalation on the part of Ukraine. It's the first time that they've used these Western missiles to strike inside Russia. It's been telegraphed as a red line for Russia. But what we know is that the U.S. made this decision to allow this largely because North Korea is sending 10,000 troops into Russia to help fight the Ukrainians. And that itself is also an escalation. Washington is very concerned about this Pyongyang and Moscow cooperation. So both sides are escalating potentially in a dangerous way. And in terms of how it affects the negotiations, I think in some ways both sides are trying to strengthen their hand.
Yeah, and of course we'll pay attention to what that means in the long term, especially when Donald Trump gets inaugurated into office. Great to have you on the show, Greg Sullivan there in Dubai for us. Now to the Middle East and United States envoy Amos Hochstein, who says an agreement to end the Israel-Hezbollah war is, quote, within our grasp after talks in Lebanon. If successful, the proposal would entail both Hezbollah fighters and Israeli ground forces to withdraw from a UN buffer zone in southern Lebanon.
This is a moment of decision-making. I'm here in Beirut to facilitate that decision, but it's ultimately the decision of the parties to reach a conclusion to this conflict. It is now within our grasp. So as the window is now, I hope the coming days yield a resolute decision.
For more on this, let's bring in Bloomberg's Dan Williams, who's in Jerusalem for us. So, Dan, within our grasp, potentially this is a ceasefire getting closer. But what are the sticking points right now? What do we know about where the agreements are and what is still, there's some gaps still?
Well, that's a question many are asking here. It's worth noting that Amos Hochstein, the U.S. envoy, is widely expected to be following up on his Beirut visit with a flight to Israel today. His itinerary remains unclear, and indeed there were reports last night that he was continuing talks with his Lebanese hosts. So that lack of clarity suggests that not everything has been nailed down, despite his call on the sides to seize the moment. There's also a question of whether the moment to be seized is because of the clock ticking on the outgoing Biden administration or because of conditions on the ground in Lebanon, in Israel. Now, we know that Israel has been very open about its conditions for suspending the hostilities, in addition to the implementation of a resolution from the United Nations Security Council dating from 2006. Israel wants an enforcement mechanism that it would deem satisfactory in the event of Hezbollah infractions, and indeed it wants to reserve the right to resort to military force itself should it see such infractions. The Lebanese are not happy about that. They're certainly not happy about signing that into a ceasefire deal. And the question is how the Americans might be able to reconcile those two positions. Presumably that will become clearer in the coming hours.
Right, and outside of what's going on between Israel and Hezbollah, down in Gaza, there's been some interesting news. So Israel has offered any Palestinians who free a hostage a $5 million reward. I mean, how are you reading into this? Why make this move and why now?
Well, it's certainly an eye-catching offer, and it was made by the Israeli Prime Minister Netanyahu, who made a visit to the Gaza Strip, right in the heart of the Gaza Strip, the Netzarim corridor, which is actually a bisecting a pathway. It's more than a road. It's now been expanded into a de facto military encampment by the Israelis. He went there with his new defense minister, Israel Katz. They actually made video statements with the sea at their backs. And I think even that appearance was meant to project Israel's dominance of the territory, effectively Israel's proximity to the victory it has demanded and called for in Gaza against Hamas. Now, Israel is now offering this $5 million reward per hostage to any Palestinian in Gaza who delivers a hostage. And I think the Israelis now are aware that winter is coming. The conditions for the 101 hostages still in Gaza, those of them still alive, will be worsening by the day. And that military options are limited. The options of a negotiated release of hostages are limited. They appear to be stalled. Those negotiations have been mediated in the past by Qatar and Egypt with the help of the United States. So it would appear the Israelis are opening up another option for Palestinians enterprising enough and brave enough to perhaps be thinking of a way out of this crisis. Keep in mind, it's not just an offer of $5 million. The Israelis are also guaranteeing any Palestinians who release a hostage safe passage out of Gaza with their families, presumably with enough money to make new and safe lives for them outside the Palestinian enclave.
Yeah, well, thanks so much for all that, Dan. That's Bloomberg's Dan Williams joining us from Jerusalem. Well, back to the Middle East, and the UN nuclear watchdog says Iran has agreed to stop enriching uranium close to the levels needed for weapons. The IAEA monitors say Iran's engineers are taking the first steps needed to cap output at 60% enriched fuel. Now, this comes after talks in Tehran this month between the agency's director general and the Iranian president.
That's right. Now, still ahead, Donald Trump's search for a Treasury Secretary intensifies as he's set to hold interviews with prospective candidates. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Now, President-elect Donald Trump's search for a Treasury Secretary is intensifying. Sources say he scheduled Wednesday interviews with former Fed Governor Kevin Warsh and Apollo Global Management CEO Mark Rowan. For more on his picks, let's bring in Bloomberg's Katya Dmitrieva, who has been following this for us. So, Katya, what is the latest? We're getting new names, we're getting new potential names, and how is this signaling potentially what Trump is focused on?
Yes, a lot of candidates. It's a bit of a jobs fair happening right now in the U.S. with all these interviews and announcements. So Warsh in particular is an interesting pick. He was formerly a Fed governor, as you mentioned there, and he was really pivotal during the 08-09 crisis for working with Wall Street. He was sort of the liaison between the Fed and the financial sector, which is exactly what this role entails. You know, Treasury Secretary is a very important role. You're the top economist, you're the top economic policy person in the U.S. You are the face for these policies globally, and so very important role, and why we've seen a lot of jockeying with folks like Elon Musk actually taking to Twitter as well to state his favorite candidate, who was just recently picked as Commerce Secretary.
And Katya, I mean, we've seen Trump move pretty quickly to try and set up what his administration looks like. And in the past 24 hours in particular, there have been a couple of surprising picks. I mean, for one, celebrity doctor Mehmet Oz. So he's got no government experience. It looks like he will be instilled in the administration. And then also we're hearing that Cantor Fitzgerald CEO Howard Lutnick will come in as Commerce Secretary. What do you expect from these candidates?
Yeah, it's a good point on Dr. Oz there. You know, he's someone that's very well known to Americans. You know, he's a surgeon, but he's also made some questionable kind of decisions in the past and comments in the past, including endorsing during the depths of COVID medically, things that were not necessarily proven medically as a quote-unquote cure for COVID. So it's these are names that are well known potentially to Americans, but not necessarily in the case of Dr. Oz, for example, having those chops. The Commerce Secretary announcement is interesting. So this is someone who had been lined up originally for a Treasury Secretary position, was one of the names that we had heard, and he's actually going to have an expanded portfolio. So Trump said, I'm appointing you Commerce Secretary, but you're going to be in charge of trade policy as well as tariffs. And we've known in the past, this particular candidate, CEO Howard Lutnick, has made comments before. He's quite a China hawk. He's made comments before about fentanyl and China's role in it. And he's also talked about EVs and how they're kind of more for elites as opposed to the average American. So that gives you a bit of flavor of what these kinds of candidates bring.
Well, thanks for giving us that breakdown, Katya. I wonder what we'll be talking about tomorrow. Another day, another new pick, potentially. Katya Dmitrieva, that. Now, let's move on. A little bit of Elon Musk and politics here, I suppose. SpaceX says its Starship has achieved new goals during its 6th major test launch, but the company scrapped plans to catch the booster with mechanical arms. The Super Heavy rocket performed a controlled landing in the Gulf of Mexico, and the Starship capsule survived re-entry into the Earth's atmosphere. U.S. President-elect Donald Trump was, of course, at the launch alongside SpaceX CEO Elon Musk.
Yeah, of course he was. Now, coming up, we'll talk markets with State Street Global Advisors, looking at the policy outlook for the Fed, the Bank of England, and the European Central Bank, among other things. That is next. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, joining us now from London is Altaf Kassam, head of EMEA investment strategy and research at State Street Global Advisors.
Good morning.
So, Altaf, wonderful to have you here with us this morning. Our attention really has been captivated today by geopolitical tensions, but I want to start by getting back to the Fed because, of course, that's always kind of front of mind for investors, right? What are you making of the current landscape? I mean, do you think that we are heading for a potential pause in December? It's kind of a coin toss in markets. So what's your view?
Yeah, you're great. And good morning, and thanks for having me. The market probability for rate cuts has wildly oscillated, but for us, we still think a December rate cut is on the cards because for us, monetary policy is still restrictive. Inflation is coming down, growth is slowing, political uncertainty and geopolitical uncertainty, as you said, abounds. So for us, the conditions are definitely still in there for another rate cut in December this year and maybe 3 next year. But as ever, central banks remain data dependent, and so every single data point will be watched. But right now, if we were guessing the mind of the Fed, it would be a rate cut still on the cards for December.
But Altaf, this is Jennifer. Let's just talk about 2025, because much of the concern is what of the proposals that we've heard of Trump's tariffs actually get implemented. You're still confident standing by cuts in 2025? Won't what the president does dictate a bit of what the Fed will end up doing?
Yeah, I mean, for us, ironically, with the Republican sweep, it's more likely that the tariffs will be pushed out because they won't need to be executed by a presidential order. They'll be able to go through the proper channels, so to speak. That takes a bit longer, but makes them kind of a bit more long-lasting. So I think tariffs and their potential effect on inflation could be a 2026 story. There's also immigration, and clearly, again, that can be executed quite quickly. But once again, we think it'll be actually a slower process than the markets are worrying about, or some corners of the market are worrying about. So for us, definitely there are inflationary implications of both tariffs and immigration policies, but we don't think it's a clear 2025 story and could be pushed into 2026. Hence, we still think 3 rate cuts are on the cards for 2025.
And let's just pick up and stick with tariffs for a moment, because I was reading through some of your research a bit earlier this morning. And when you look out to Europe in particular, it's pretty clear that some of the biggest risks to you come from the potential new policies that we will see taking shape out of the U.S. Tariffs in particular, pressure to ramp up defense spending is another thing that you've mentioned. Walk us through what your thinking is on Europe.
Yeah, I mean, Europe, as ever, unfortunately, seems to be between a rock and a hard place. So there's the pressure from the Trump presidency to push up spending, to remain part of NATO. There's fiscal issues as well. You know, France is in the eye of the storm with its deficit at a time when rates are staying high. And, you know, growth is weaker in the Eurozone. But at the same time, inflation is behaving in a much more orderly fashion. So we think, again, even though they wouldn't dare call it this, there is scope for the ECB to preempt, to cut rates, I dare say competitively devalue the euro, so that the effect of tariffs on the end US consumer on European goods isn't that strongly felt. So there are the lever that the ECB can pull effectively is rate cuts, but Europe is in a tough spot as usual with weak growth, Germany in kind of political flux, China not firing, and the US putting pressure on it to enact spending in all sorts of directions that it doesn't really need to do right now.
So, Altaf, does that mean, or do you see any potential then for making a bet on European equities, or do you follow what many investors are doing and get into the U.S. market, potentially India? What does that mean for you?
Yeah, that's a really good question. I mean, our top call is to kind of stick with what's winning. And as much as it hurts people with valuation levels where they are, obviously we've got a big stock reporting this evening, you know, is to stick with the US large cap. If we do see, you know, the Trump sugar rush continue into next year, risk appetite stays strong, that may broaden out of US large caps into small caps. But for us to really start looking outside the US, one thing we would need is a weakening dollar, which doesn't seem on the cards. So for Europe, it really is an area where we think you play it via sectors. So we like sectors where AI will diffuse out of technology and into those sectors, and sectors where Europe is already strong. For example, healthcare, we have a number of global leaders, and industrials as well, where we think the confluence of AI and robotics will be a particularly powerful force for 2025. So it's not like we're saying stay out of Europe completely. We're definitely saying stick with the US for now, maybe broaden from large caps to small caps, but play Europe through sectors.
Yeah. And how about the UK? We get inflation data out today. And of course, there seems to be a lot of uncertainty around where the BOE goes next. Quickly, what's your view on how to play the UK?
Yeah, I think the budget means that the growth and inflation outlook is quite uncertain in the UK. So for us, it's more of a wait and see. We don't think the Bank of England will cut in December. Services inflation is still too sticky. So another market to pause on for now.
All right, we have to leave it there. Altaf, great to get your insights. Altaf Kassam, MD and head of EMEA investment strategy and research at State Street Global Advisors. Thanks so much. And a quick check on where markets are right now. We mentioned it is the big day. NVIDIA earnings really in focus for investors. As you can see there, a lot of green on the screen, especially for U.S. equities and, of course, European equities. So we will pay close attention to where that goes throughout the day. Now, coming up, Dubai's property scene shows no signs of slowing down as the UAE looks to emerge as the world's top wealth magnet for the third consecutive year. We'll be speaking with the founder and chairman of Damac. That is coming up. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. Ukraine fires U.S.-made missiles into Russia, escalating the 1,000-day conflict into a dangerous new phase. United States envoy Amos Hochstein says a ceasefire in Lebanon is, quote, within our grasp, signaling hope there will be a deal in the coming days. And on today's Big Take, a Bloomberg analysis shows a vast shipping hub off Malaysia is funneling billions of dollars of sanctioned Iranian oil into China. All of that coming up next, but it is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Christine Burke in Dubai, where it's just gone 8:30 or 9:30 a.m. Welcome to Horizons Middle East and Africa, the second hour of our show.
That's right. In the second half of the show. Christine, great to have you. Let's take a look at where markets, though, are positioned ahead of the trading day. We mentioned some of the geopolitical tensions that we did see on Tuesday. That pushed many investors to havens such as gold. I'm going to start with gold because it's rising for a third day right now, trading above 2,636, just about an ounce. And what we're hearing from Goldman Sachs, they're actually anticipating more of a bull case for bullion leading into 2025, potentially pushing up towards $3,000. That's the target for 2025. I'm also watching oil closely. Right now, it's trading a bit sideways. If we take a look at Brent crude at about 73.25 cents a barrel. But still, crude is down on the year, and the IEA is projecting there's more headwinds potentially to come for crude with a potential surplus in 2025 amid oversupplies. Also have U.S. equity futures on the board. We've been paying close attention to them, continuing to pair last week's drop. If we look at the NASDAQ 100 futures in particular, they're slightly up after a gain on Tuesday that was largely driven by tech and the Mag 7. The bright spot, though, was NVIDIA, up more than 4%. And I want to just stick on NVIDIA and bring you this terminal chart because that stock is really in the limelight as the chip maker reports third quarter results after the U.S. market closes. As this chart shows, we're seeing valuation of NVIDIA continuing to grow. It's trading at nearly half the multiple from the 2021 peak. Questions, though, still looming over whether the world's most valuable company can continue to be bolstered by AI spending. Investors paying close attention to that. And again, potentially how that could, again, affect a number of other companies that rely on AI. Well, let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen, yeah, as you say, watching to see how NVIDIA's earnings pan out because that could affect a number of companies and the mood overall in the region, which is looking quite subdued. Traders are moving quite cautiously. The region's benchmark is down, trading volumes about 40% lower than usual this time in the session. So read into it what you will. The big drag on the region's benchmark today is TSMC. And in many ways, Taiwan is one of the markets with the most to lose out of NVIDIA's earnings because we've seen outflows for the month of November, given the geopolitical concerns. You think back to the first trade war, it was one of the markets that performed the worst. Now with US-China tensions, Trump's tariffs, what is this going to mean for Taiwan markets? And of course, this is also a market that has seen about 20% gain since the start of the year in dollar terms. So traders might have been choosing to lock in some of those gains. It's interesting on a day like this, the CSI 300 is extending gains from a day ago, and this is led by the healthcare sector. So this is what we're seeing across the region, guys.
Thank you, Avril, for that update. That's Avril Hong in Singapore. Well, let's turn it back to the region now and talk about the real estate market here in Dubai, because today with us on set, we have Hussain Sajwani, who's founder and chairman of Dubai-based luxury real estate property developer Damac Properties. So, Hussain, wonderful to have you on the show with us today. There's so much that we can cover and talk about when it comes to the Dubai real estate market. This is a market that has been heating up for quite some time. Fresh data from the third quarter shows that we recently saw an 18% increase in rental prices. Also, home values have now risen for 17 straight quarters. What do you make of the heat in this market, and how long do you think we can see this rally continue and prices here?
Dubai, after COVID, has changed and positioned itself as the #1 global city in the world. I think the issues and the challenges in Europe have increased also after COVID from the tax and security and other things, which is helping Dubai tremendously. Remember, Dubai used to rely heavily or a lot on Middle East, a little bit of Asian, people coming to live and work here and invest. But today, Europe with 400 or 500 million people, and with Ukraine war and inflation and taxes and all other things, a lot of talent from Europe and a lot of wealth from Europe moving to Dubai, and that's helping Dubai to keep growing. Really, there is a genuine growth of population. There is a genuine growth of investments in Dubai. You can see every day more companies coming, more fund managers coming, more and more.
Hussain, this is Jennifer here in Johannesburg. You mentioned that there is a genuine growth of population, and yet we, of course, as Christine was mentioning there, we've seen a growth of supply. Is there a concern, though, that supply outpaces the growth of the population?
I don't see that in the coming couple of years. I still see the demand is strong. I still see the supply not going to be able to meet the demand, at least for the coming few years.
Yeah, and there was a media gathering yesterday, and this was to promote Damac Islands, and it was said that there are these new properties, and they have already sold out really before they have even come to the market. So that really does tell you something. Can I ask you about Saudi Arabia? That's actually where I live full time when I'm not here in Dubai, and I live right near to a Damac property. I mean, do you have plans to expand in Saudi Arabia, and what are your views as you take decisions on that market in particular?
Saudi is a huge market. The Prince Mohammed bin Salman has made major changes in that country and is going the right direction. I think the potential is huge. We are studying and looking at a number of opportunities in Saudi Arabia, but it's a coming 20 years. That's the biggest market around us.
Hussain, what do those opportunities look like? What sort of properties are you exploring?
We are at the high-end residential, properties, what you call villas or apartments, and that's our specialty is. And in Dubai, we have launched some, in my view, and fantastic and amazing products like Cavalli Casa, like Damac Bay One, and a few others. And in Saudi Arabia, we will focus on the high end.
Interesting. And speaking of high end, I've got to ask you this question. Do you plan to do any more Trump developments, given that, we have Donald Trump taking the White House again, starting in January of 2025?
Our relation with Trump organization goes almost a decade ago, where we made a project with him in Dubai. And we are open for any new project, depends on the circumstances and on the market.
Hussain, I want to talk to you about the markets, because if we take a look outside of the GCC, the real estate market is looking different depending on where you're looking. Where are you and the team focused on outside of the GCC? Are there other opportunities? You're talking about potential for a Trump property, given your relationship. Are there other markets where you're looking now that could be primed for that?
No, we are going to focus on GCC. Plus, we're focusing heavily now on data centers. So we have gone to Asia. We have data center under construction in Indonesia, Malaysia, and Thailand. And we're doing some data centers in Europe. So we already acquired the land in Spain and in Greece, and looking at some other European cities.
Yeah, and I'm glad that you brought up data centers, because we are aware that this is a place where you have been expanding your footprint. Last month, we had a deal saying that one of the Damac Properties subsidiaries plans to invest more than $960 million in data centers in Thailand in particular. The UAE is also doing so much in terms of data centers. Same thing with Saudi Arabia. I mean, that is a big play. Do you plan to do more here and more outside of the areas that you've just mentioned when it comes to the data centers?
Yeah, we have, as a matter of fact, our first data center was built in Saudi Arabia. It's already operational, and we have 2 data centers in Saudi Arabia, Dammam and Riyadh, and now we're expanding it. And also in UAE, we are in the stage of acquiring lands to do data centers. So in the Middle East will be Saudi Arabia and UAE. We have already a data center under construction in Izmir in Turkey.
All right, we have to leave it there. Really great to get you on set with us there. Hussain Sajwani, founder and chairman of Damac, joining Christine there in studio. Now let's turn to the Bloomberg Big Take today. A Bloomberg analysis of nearly 5 years of satellite images shows a vast shipping hub off Malaysia that's funneling billions of dollars of sanctioned Iranian oil into China. That clandestine network is the subject of our Bloomberg Big Take today. And for the details on this, let's turn to our Bloomberg Global Business senior reporter and host of the Big Take Asia podcast, Juan Ha, who's joining us. So please give us some insight. What do we know about this dark fleet of tankers and the size of these operations? This is a fascinating deep dive that you and the team did.
Fascinating is the right word. I mean, our colleagues basically poured over 5 years of satellite data, and what they found was that the world's largest gathering point for dark fleet oil tankers is actually just off the coast of Malaysia. So these are ships that we suspect picked up sanctioned oil in Iran, traveled to Malaysia, where they basically then move the oil to other tankers that then take this cargo, which is now relabeled as Malaysian oil, into China. And it's happening at, gigantic, numbers. I mean, the Bloomberg investigation estimates that it's about 350 million barrels of oil this year that changed hands this way. That's a, rough estimate of more than $20 billion. So really huge numbers. What's really fascinating is that our investigation looked at this very particular pattern in shipping in which, 2 ships are side by side. And our colleagues actually caught these 2 ships side by side doing exactly that. When 2 ships are side by side for hours at a time, and one of them or both of them have basically masked their location by turning off their transponders, experts say that's a very key sign that often something illicit is happening, that these are illicit oil transfers. And so it's really fascinating that our colleagues actually were able to witness that off the coast of Malaysia.
Yeah, it really is fascinating. And I myself am a huge fan of all of our commodities coverage. And I think anything involving illicit open sea operations is interesting. Let's talk about the timing of this. I mean, why are these operations happening right now?
Well, since Russia's invasion of Ukraine, the dark fleet has been increasing. So a lot of these ships are now congregating in Malaysia to do this operation. But we also know that in 2018, the U.S. reimposed sanctions on Iran. And of course, so Iran then is now struggling to find willing buyers for its sanctioned oil. There aren't too many. But China, of course, doesn't recognize the U.S. sanctions. And on top of that, it's got growing energy needs, and it wants a way for its small refineries to access cheap oil. So this provides a very convenient cover for Chinese corporations to do this, and potentially not then have to face secondary U.S. sanctions. It's happening in really large scales, and I think that was what our colleagues found, was that they're seeing these ship-to-ship transfers basically in such huge volumes over the last 4 years. Really something unprecedented.
Yeah, unprecedented and really interesting. If you haven't had a chance to go read the big take today, I encourage you to do so on the terminal, also on the web. That's Bloomberg Global Business senior reporter and host of the Big Take Asia podcast, Juan Ha. Thank you very much for all of those insights and excellent reporting. Coming up, most African central banks are expected to lower interest rates in the next 3 weeks amid concerns the window to ease may narrow after Donald Trump becomes U.S. president. More on this next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajit in Johannesburg. Now, most African central banks are expected to lower interest rates in the next 3 weeks. It comes amid concerns that the window to ease rates further may narrow after Donald Trump becomes U.S. president. Joining us now to discuss further is Yvonne Mohango, Africa economist at Bloomberg Economics, who is in Johannesburg. So, Yvonne, let's just talk, first of all, about the Trump effect and what that is going to have on African central banks. What is your expectation?
So the first or the immediate impact following the election results was the dollar strengthening. And as you can imagine, for emerging markets, that meant a decline. We saw emerging markets currencies decline by as much as 5%, which of course raises concerns about inflation going forward. So that's something to be considered. However, the more longer term effect and something that will play out towards the end of 2025 into the following year is what it means for tariffs. As we know, Trump has threatened tariffs, and that implies higher consumer prices. So there is a concern that inflation will pick up over the next 12 months. And that, of course, would mean central banks that are currently easing would likely become less dovish.
Hi, Yvonne. So you'll certainly be keeping pretty busy as we've got something like 14 rate decisions coming over the next couple of weeks. And yesterday, we actually already got one of those decisions from Angola. It kept rates unchanged, with the governor saying that inflation remains too high. I mean, how big a reality is high inflation for the other countries as well, especially as we're watching inflation data today in South Africa?
Yeah, so inflation continues to be an issue in Africa, particularly for commodity exporting countries such as Angola and Nigeria, which export crude. We still have inflation as high as 30% in both countries. In the case of Angola, as you rightly mentioned, they opted not to hike yesterday because they are seeing a turn in the inflation cycle. However, a country like Nigeria continues to hike, and we expect them to do so into the first quarter. South Africa, as you rightly mentioned, has a rate decision to make tomorrow. The market and we are expecting them to cut by 25 basis points, and that's because inflation has actually dropped. We have CPI data out today for South Africa. We're expecting inflation to fall to the lower band of the inflation target, so that's 3%, which is quite significant considering where we were a year ago.
Yvonne, there's inflation. There's also a stronger dollar, as you were mentioning. That's led to depreciation among a number of currencies, including South Africa's rand. But then the interesting point that I'm trying to figure out is what does that mean then for the debt burdens of a number of these countries? There was the expectation that they were coming out of that. What could this mean then for 2025?
So if we're heading into an environment where interest rates remain higher than we'd anticipated before a Trump presidency, it does imply that borrowing costs remain high, which is a concern. As you're aware, Africa is currently experiencing a funding squeeze, which means they are struggling to raise funding externally because of high interest rates. And our concern is if interest rates remain high, that continues to be an issue going forward.
That's the expectation, though, right?
Yes.
So where do you see that hurting the most? Which economies are you looking closely at?
So the countries that are particularly highly indebted, so the countries that are high up our list would be a country like Kenya, countries such as Ghana, which are currently sitting with debt to GDP ratios of over 60%. Also, some of our bigger concerns is that the debt servicing cost is particularly high. In several countries' cases, they're paying up to a third of their government revenue towards debt servicing costs, and that includes the countries that I've mentioned. So if interest rates do remain elevated, that remains an issue going forward.
All right, well, that will certainly be on our radar. Africa economist at Bloomberg Economics, Yvonne Mohango in Johannesburg. Thank you for all those insights. Well, coming up, we're looking ahead to the release of inflation data out of the UK, with estimates showing an acceleration that may complicate the policy outlook for the Bank of England. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, the UK is set to release its inflation data for October, with a Bloomberg poll showing a likely acceleration in the month-on-month and also in the year-on-year readings. Let's bring in Bloomberg MLive cross-asset strategist Ven Ram, who joins me now in the Dubai studio here. So, Ven, always lovely to speak to you. We talk so much on IB and other things, but it's the first time we're sitting here on the set, so it's nice to be together. Let's talk about that UK inflation print. It's likely that we will see today, based on the expectations, inflation move above the BOE's 2% target again for the first time in a while. What does that signal to you? I mean, how significant will that be?
Morning, and thank you for having me. Look, I mean, I think that it's going to be an uncomfortable reading for the Bank of England, simply because, as you mentioned, it's going to take it back above 2%. But, you know, this is a month when they are expecting an energy-led inflation spike. So they may kind of look through it. But what matters for the BOE is what happens in the longer run. If you look at the inflation break-evens 2 years from now, they're factoring in a rate of 3.2%. That is 50 basis points over what the BOE is factoring in for next year, and a full percentage point higher than what they're factoring in for 2026. So that means that the markets are thinking, hey, look, the BOE is going to miss the inflation target for a long time now. And therefore, the markets have kind of turned skeptical about how far the BOE can go with its loosening plan.
Ven, this is Jennifer in Johannesburg. I want to just talk to you about the sentiment in the markets right now, being driven for a number of reasons, mainly geopolitical factors. And we saw on Tuesday, safe havens like gold being and bonds, of course, being the recipients of that. Are there any other places, though, in the market globally that could potentially be a shield if we continue to see this volatility and this uncertainty, of course, then until Trump gets in office in January? What's your take?
I think two of the best havens, Jennifer, are going to be gold, which you mentioned, and the other thing which the markets are kind of glossing over and which is underpriced is the Swiss franc. Now, the Swiss franc is a net external creditor to the world to a huge extent, and that provides a natural buoyancy to the currency. And it hasn't been a haven of choice this week, but I think that in the months to come it will be, because of the fundamentally, if you're going to be living in a world of Trump tariffs, I think that Switzerland is better placed than the rest of the Europe in taking on those tariffs, because if you look at most of Switzerland's exports, they are in value-added sectors like pharmaceuticals and machinery, which are more resistant to the idea of tariffs. And therefore, I think that the Swiss franc has got a lot more buoyancy, and it's got its own haven appeal as well. And if you look back to the crisis in the 2008-9 crisis or other crises, through periodically, the franc has been the currency that's provided that haven, that's lived up to that haven billing, really.
Can we talk quickly about the dollar? Because we are seeing a return to the green this morning after a bit of weakness over the last couple of days. Bearish, bullish. I mean, what's the view for you as we take all these things into consideration?
I think bullish with a tinge of skepticism is how I would characterize it. Simply because the dollar has run up a lot. And this is kind of the playbook we had in 2016 after the elections in October and November. It rallied really big, did a bit of thing in December, and then after that it had losses. And this playbook reminds me of what happened then. And I think that the dollar has run up a lot. There's a lot of the Trump news priced in, the tariff idea, all those things are already priced in. So, and the pre-election bluster somehow doesn't always translate word for word once you come into office. And if you think about all that, then it means that the idea is that the dollar is close to being pretty ripe. And therefore, I think that a correction makes it likely.
All right, we have to leave it there. Bloomberg MLive cross-asset strategist Ven Ram, thanks so much for joining us. That's Horizons Middle East and Africa. I'm Jennifer Zabasajja with Christine Burke. Stick with us for Daybreak Europe.